Good morning, one and all, and welcome to this morning's video. So this morning I have 4 pairs on watch, and those are Kiwi CAD, Kiwi Swiss, Pound Swiss, and Sugar USD. So my favorite of the bunch at the moment is Kiwi CAD, and if we just zoom out to the higher time frames, we shall analyze why that is. Okay, so the things that stand out to me is that we have this impulse up, followed by this failed continuation. And I say failed continuation because we have the 1, 2, the 3 drives. Okay, we have the middle section within it. Okay, and then this third drive, normally we would anticipate this following through to the upside. Okay, to take out potentially this high here, which this high only wick to. Okay, but in this instance, price just dropped out. We get this little bit of a scoop there. Okay, that may have been the clue. Okay, so when we committed here and we get a bit of a scoop, okay, that may have been the clue that we were going to drop out, and that's exactly what happened. Okay, so then we come back up. So that's kind of a failed bull flag, a failed continuation structure. Then we have this sharp move up followed by this sharp move down. Okay, and then we break this low correctively, suggesting a move to the upside, and then we come all the way back up, and then we near miss to this high. So this is where things start to get interesting for me in terms of a possible sell opportunity. So we near miss to that high, and we know that when we near miss to a high, particularly a sharp one such as that, where there was a big runoff, given that this is the daily chart, that implies that we will likely come all the way back to tap that high, more often than not to break above, catch people the wrong side of the market who believe that this is going to the moon. Okay, to use a common phrase that many people use. And then what happens the majority of the time is that we see a move to the downside. Okay, we break back below the area of value and then plummet to the downside. Okay, we've got the middle section within here as well. So we have this structure here. We have the impulse correction continuation, which is the natural ebb and flow of the market. Okay, how the market moves. And now you can see we are above the area where potentially people would likely get themselves caught the wrong side of the market. Okay, as I drill down, you can see that we are stalling at that area of value. We're stalling just above it. Okay, so that's typical behavior as well. We've got this structure here. You can almost see the structure here as well because we have this move there. We have the middle section within it. Okay, it wouldn't surprise me if this just drops out. Okay, which is what I'll be looking for today. It could also be, because we have to remain neutral, it could also be a bull flag to give us something like that to push higher. Okay, if we were to get that, then I would definitely be looking to get long because the market would have shown its hand. Okay, we would have had a structure to work with suggesting that this is not people getting caught the wrong side of the market. This is actually just volume accumulation for a move to the upside. But obviously, if you look at the bottom of the screen, the time at the bottom of the screen as I scroll across, that would not be ready by the end of the day. So because it wouldn't be ready by the end of the day, the only thing I'm interested in at this moment in time is the following. Okay, I'll be interested in a dropout. Okay, below this area of inflection. Where is it? There we go, that area of inflection there, just to make sure we're not retesting the back end of that as well, because potentially if I was to look for an entry here, you could be tagged in, tagged out, and then this whole thing becomes just a bigger bull flag to push higher like that because of the retest of the back of that. But if we, whoops, I didn't mean to do that. There we go. There we go. We're back in business. So if we just drop out below that area of inflection, then I would be looking to get short with a reduced risk entry on the break of a 5-minute continuation as a minimum. And if we got a 15-minute continuation, so 6 to 8 corrective 15-minute candles, then I would also be looking for an entry within the flag. Okay, and then I would be able to manage a reduced risk entry on the break down to the first inflection point for something in the region of 3.8%. And then in this instance, my target would be here. It's not to say that these trades wouldn't carry on for longer, but we don't want to sit through massive pullbacks. So that would be my target area where I would anticipate some consolidation. Okay, we got that move, and then what I would do is I would manage this using the mechanical management tool, Fibonacci, and I would measure from range to range. Okay, and then I would set a take profit there, and I will trail my stop loss at the same time. So that is Kiwi CAD. So moving on to the next pair, Kiwi Swiss. So if the Kiwi is moving to the downside, that adds confidence that it will likely do so across the board. Okay, it's not always the case, but that's certainly a correlation we can use to add another layer of confluence to our trades in many instances. Okay, so on the higher time frames, Kiwi CAD, if we zoom out, we have to remember that we have tapped that low and moved up. So potentially this could be volume accumulation to push higher at some stage, but we can see here that we've responded from an area of value. So potentially we could be coming all the way down to these lows, and potentially that low that these lows keep near missing too, for like a double bottom bounce before we move to the upside. So just because we've tapped that low to the left, that one there, it doesn't mean to say that we're immediately going to rally to the upside. And this price action here, this non-progressive price action to the upside, kind of gives us a clue. Okay, so as I drill down, you can see we had that nice weekly close there last week. We have two areas of value here. We have this one here. We have this a bit of a, you could call that one structured there. Okay, and then we have a bit of a running channel. We break out of that, we form a running channel. This is the origin of the move, so this is the more valuable one. Okay, and price comes all the way back up there, up to that area, taps into it, and then moves aggressively to the downside. Okay, you can see that here. And yesterday, you can see yesterday's close. We've had this very bearish close, which is closed back beneath here. That's a tick in the box. So if we consolidate after this aggressive move down, and we do so kind of just about under this area, that would suggest that this is not a retest of this area to get long. Okay, you can see the move there. I was looking for entries, excuse me, I was looking for entries within here at the top of this structure, but we didn't manage to get it. We just sold off. Okay. So what I'll be looking for, and this is starting to do what I was anticipating last night, I will be looking for, because of how big this drop has been, and there's been several corrections as well, I'll only be looking for a risk entry within the flag. And when I saw last night, when I was analyzing these pairs, doing my evening forecast, when I saw this little inflection point here, which you can see more clearly on the 15-minute chart, so we have a sharp move up followed by a sharp move down. But beneath all of this consolidation, I thought that this would likely act as the top of a 1 hour flag to push lower. And sure enough, you can see what I drew to the right. We do seem to be, this is the sort of area where I would anticipate maybe that, a bit of a FOMO channel. Then we come up, and then we have those three channels. Okay, so that's what I'm going to be looking for: a 3-touch 1 hour continuation, or a 2-touch 1 hour continuation with a 3-touch structural approach. And what I mean by that is, if we get something like this, okay, everything is just frozen up on my computer, right? My mouse has just completely died. So I don't know what's happened there. A 3-touch structural approach like that, I would also get short with a risk entry within something like that as well. So that is Kiwi Swiss. Okay, and I would, just to touch on it, one thing I'm trying to do more of is your stop loss should go where your trade is invalidated. So the question you should be asking yourself is, where am I wrong? Okay, so where does this trade idea become wrong? Because potentially we could retest the back end of that. So to have your stop loss just above this structure, so say there, okay, price could still come back up, retest the back end of this structure, and then drop. Okay, so where are we actually wrong in this instance? Well, we're wrong. Okay, my mouse has just died again, so I don't know what is going on here. But if we started to break above these highs here and push up, then the trade idea, in my opinion, has been invalidated. Okay, so just protecting myself just above this high, that's what I would do. So that is Kiwi Swiss. I don't know if I'm going to get through the end of this video with my mouse actually working for the duration, but we shall try. Okay, so pound Swiss. So pound Swiss. This is another lovely setup. Okay, so we have all of this consolidation here, and this is the origin of this move. Okay, that's where it all started. So it's no surprise to me. The mouse has just died again. It's no surprise to me that we gravitated back towards there, broke above, caught people the wrong side of the market who thought it was going to the moon, and then it plummets to the downside. So you can see here, this looks very, very deliberate and unlikely to follow all the way through down to here and potentially all the way back down to there. But certainly we could try and capitalize on a move down to here. And the mouse has died again. Okay. 14% battery. Okay, well, that might have something to do with it. So I don't know how I'm going to do this with the mouse pad. I got no warning before this video that the mouse was low. So let's see. Okay, the mouse pad's not even working either. Okay, bear with me, folks. I'm just going to try and plug this mouse in. Okay, the connection has gone as well, so we don't even have a connection to charge this mouse. So how I'm going to do this video, I do not know. Okay, so let's just speed this up a little bit because we're having technical issues. I got no warning whatsoever about the battery. So what I'm going to do here is it will be the same thing again. I'm going to try and do this without any mouse. You can see the start of the consolidation there. Okay, so I thought that would likely be where price would gravitate back towards. This looks like being taking a little bit longer to be ready than the other pair. So if we get a 3-touch like that, just as I was looking for on the other pair, then I would look to get short within the flag there, and then I would be able to manage it down to there as a first target, and then my overall target would be, okay, so I'm using the mouse pad now, or trying to, but even that's not working, so I can't seem to click on this. Okay, trading view is not working either, so I can't seem to click on this. Okay, well, let's eyeball it. Okay, so we've got about 3% to the low there, 3.5%, and then that would be my target down there for something in the region of about 8%, and I would mechanically manage this as well. I would set the take profit there and trail my stop loss accordingly. In this instance, I would have my stop loss just above here, because if we came all the way back up to here to retest the back end of that, then price is likely doing something else. If we come all the way back up to there, then this is likely not what we think it is, and some kind of larger structure. So in this instance, I would be happy to have my stop loss just above here. So that is pound Swiss, and I'm going to try and continue doing this as best I can with the mouse pad. And I'll tell you what, after this video, I'm going to be looking for the charger cable for this mouse, wherever that has disappeared to. So, Sugar USD. Okay, so I'm just going to zoom out to the weekly just because I just cannot scroll. The scroll option is just not working on TradingView either. So, on the weekly chart, we have that high there. I talked about this previously. We have 2 highs there, and we have a near miss to them both. Okay, so we'll likely gravitate back towards these highs there. Okay, so I'm analyzing these 2 highs. We have a sharp move there and a sharp sell-off, suggesting liquidity there. But when price sells off and it gets to that low, it correctively breaks it. Okay, whereas with this high here, we have where volume was built. Okay, we have a very sharp sell-off, and we find enough liquidity up here to cause price to smash through this previous low impulsively, and not just smash through any low, but we smashed through a very, very sharp low sharp move. So we have this sharp move down, followed by this incredibly sharp move up. And this consolidation found enough liquidity to cause it to smash through this low very impulsively, suggesting that there's probably more liquidity here than there is here, especially when this is kind of the origin of this move. Okay, so we break above that low. This is the origin. This is the better area of value. And sure enough, we completely disrespect that high. We move up to the more attractive area of value, and then I'm going to have to do this just by switching time frames because I can't scroll. Okay, so we sell off correctively, more correctively than we moved up. So that suggests that we're coming back up, likely to tap the orders that were sat just above there. That's exactly what happens. We sell off, and then we could have been seeing, this is not easy to draw when your mouse is not working either. We could have been seeing a reversal structure where we have this 1, 2, 3, which pushes price to the upside, but instead, where we kind of tap into that low as well, a reversal structure that taps into that, but instead we just completely smashed through this low, suggesting that this is just an impulse correction continuation, which would make sense because prices. This low here is the base of all of this consolidation. So where I would expect there to be a lot of volume. Okay, so if we just zoom in a bit more, so that's why I've got my target arrow down there. Okay, you can see the consolidation underneath the low. And if we can actually increase the size of this, I don't know how I'm going to do this with whoops. Okay, so I'm trying to do this with no mouse, but it's not. Okay, I can't scroll. I can't do anything. So we have the origin of this move here, which happens to be the retest of the back end of that previous low. So that's likely where price would gravitate back towards there. And you can see the consolidation there. So what I'll be looking for today from this pair is I'll be looking for, I can't zoom in, folks, so I can't get any closer than this. So I will be looking for price to tap into that area of value, the origin of all of this move, tap into it, push down, and then a 15-minute continuation. So 6 to 8 corrective 15-minute candles. Okay, and I've just drawn it slightly lower down because you can see we have a bit of a consolidation here. And often when that's the case, if we do tap into an area of value and push down, that is likely where the correction will take place, which kind of gives us that mini head and shoulders pattern. And then I would be able to manage this down to the low of this structure for something in the region of 5.5%. And then my target. So just to touch on it, I'm looking for a 15-minute continuation in this instance, not a 5-minute correction if we tap this area, just because of how far we are into the higher time frame run, that run there. So I'm looking for slightly more deliberacy. Okay, and then my target would be the low of that structure, which I just showed you a moment ago there. Okay, and I would mechanically manage that as well in the manner described previously. So that is what I'm going to be looking for today, guys and girls, and I hope you've enjoyed this video. I will get that mouse charged for tomorrow morning so that we don't run into any more issues. But that is one of the things that I've noticed in life and about trading, is that you need to be able to adapt to things that happen. Okay, the market is moving sideways 80% of the time, and then suddenly everything happens all at once, and you have to be able to adapt. If you're in a trade, okay, and something happens or there's news coming up, you need to be on the ball and ready to adapt if something unforeseen happens at the time. You need to be able to pivot very quickly in trading. So when something happens, you need to be ready, just as when your mouse packs up during the middle of a video. But anyway, folks, I hope you've enjoyed this, and I will of course update you if I have placed any trades. Okay, it's been a long time since I've placed any. There's just literally been nothing whatsoever shaping up that I've been looking for. The moves of pretty much all of them have played out as anticipated, but that doesn't always mean that you'll get an entry. But have a great day, folks, and I'll see you again in the next video. Thank you.